I have already 11% of profit never get liquidated by using 50x of leverage without any stop losses, even if the price will drop 50%. I'm full-time institutional crypto trader and part-time YouTuber. And in this video, I will show you exactly how to use this strategy. Let's go! This is a problem that we all know. You open a position with a leverage and price heavily drops immediately after. As a result, your position is liquidated. But after, price turns around and ends up higher. And as a result, you stay with a loss instead of a profit. To avoid liquidation and earn money, there is one simple strategy. With this strategy, you can select a different type of leverage and still have a limited risk. So let's say just $50. But at the same time, no stop losses are needed and there is no liquidation risk. So the price can drop 10, 20, even 50%, and your position will be still open and not be liquidated. And don't forget, even if the price will drop 50%, your total risk will be still $50. But at the same time, you have unlimited potential profit. And this is the advantage of Bitcoin call option. Bitcoin call option is simple to use and can be traded on exchanges such as Binance exchange, ByBit exchange, and also the most liquid exchange for cryptocurrency options, deribit exchange. For example, all my trades I do on deribit exchange. I have link in the description below for your registration, so you can get a bonus from me. I will buy for you live call option and show you how much profit is possible to earn. And at the end of this video, I will show you how much profit I made with options trading. So let's go and buy call option. So let's assume I'm really bullish. And I think that in the next 20 days, the price of Ethereum will skyrocket. This strategy can be also used for Bitcoin, XRP and Solana. But first of all, let's take a look at the Ethereum. Let's say I would like to go long on Ethereum with 50x of leverage. To buy an option with a leverage of 50x, I have simply to find an option which price is equal to 0.002 or less. For example, this option has a price of 0.0165 Ethereum, which is equal to $45, so a bit less than $50. By buying this call option, which has a price of less than $50, I will profit from price increase of 1 Ethereum. So I pay $50 and I can have a potential profit from price increase of 1 Ethereum, which has a notional value right now of $2,750. So I pay $45 and I can profit from a position of $2,750. And if I divide the price of Ethereum, which is equal to $2,750, so $2,750, with a price of an option which is equal to $45 right now, I will get a leverage of 61x, so even more than 50x. The prices changes every day, even every minute. And if you would like to stay up to date, you can join my free Discord channel. The link you will find in the description below. And I'm going to buy this call option on deribit exchange. If you have an account on Binance or a ByBit exchange, this will be very similar. And to buy this call option, I have to click on it, and here I have the trading window. Here we can see the short summary of the call option. After that, I have to select the amount which I would like to trade. In this case, one call option is equal to 1 Ethereum. So it means I can profit from price increase of 1 Ethereum. And to profit from price increase of 1 Ethereum, I have to pay an option premium, which in this case is equal to 0.017 Ethereum, which is roughly equivalent of $45. And to buy this call option, I have to click on the buy button and confirm. And the call option was bought. Done. So now let's close the trading window. And here we can see that now I have a position of 1 Ethereum. Now let's take a look how much profit I can make and what kind of risk I have. Here you can see the graph of Ethereum. To understand the advantage of a call option, let's take a look at the classical example of going long with a future. Let's say I go long with Ethereum future with 50x of leverage and my collateral is equal to $50. So it means by using a futures with a collateral of $50 and 50x of leverage, the price should move less than 2% against me and my long position with a future will be liquidated. So only 2% against me with a futures and the position will be liquidated. When I am using options, so call option which I just bought, the price of Ethereum in this case can drop 10%, 20%, even 50%, and my position will be still opened and there will be no liquidation. And at the same time, I have unlimited potential profit. And don't forget, by using futures, I also have to pay funding fees. Right now, by opening a long position with a futures on Binance, you have to pay a funding fee of 0.0085%. So this seems to be peanuts. But if you take funding fees on an annualized basis, you will be surprised because those peanuts on annual basis are equal to almost 10%. So it means by holding a position 1 year, you will have a loss of 10% from your position. If the notional position is equal to $3,000, which is roughly 1 Ethereum, then after 1 year, the amount of funding fees that you paid will be equal to $300. And sometimes the annualized basis jump to 10, 20 or even 30% on annual basis. So that's why holding a long position with a leverage with a futures could be costly. As you can see, as I spoke to you, the value of my option already increased and I have already a small profit, which is equal to 9%. So not bad. If the price of Ethereum will rise $100 higher and the volatility is still the same, the price of my option will increase to $72. And this will be equal to 50% of profit. So the price of Ethereum should move only 4% higher and my profit from the call option that I bought will be equal to 50%. In case the price will move $200 higher, the value of my call option will be equal to roughly $100. And my profit in this case will be equal to more than 2x. So the price of Ethereum should move 7% higher and I will already have 2x of profit. So as you can see, this is a high leverage with high return. And if the price will move $400 higher and will be equal to $3,200, which is equal to my strike price, and the volatility remains the same, the option value could be $170. This is a roughly estimate because the value of the option could be affected by different parameters. And if the volatility of Ethereum will increase, the value of the option could be even higher than $170. And already $170, this is more than 3x of profit. So the price of Ethereum should move higher only 14% and the profit from my call option will be equal to more than 3x. And at the same time, my total risk is equal to $48, which I paid for the option premium. So it means no matter what will happen with the price of Ethereum, my option will be still opened and there will be no liquidation. And I have a potential profit of many x. But there is one significant disadvantage of a call option. Each call option has its own maturity date. For example, the call option which I bought will expire after 21 days, so roughly 3 weeks. And if the price of Ethereum at the expiration date will be lower than $3,200, my option will expire worthless, and I will lose my $48. But this disadvantage for the buyer is advantage for the seller of the option, because time is always on the seller side. And this is exactly why I prefer to sell options. And as I said in the beginning of this video, I will show you my profits from the options trading. Today is the 13th of February 2025. In the beginning of February, I started my public portfolio with an initial balance of $2,000. 2 weeks later, as you can see, the account value is equal to $2,062. So it means I earned $62 just in 2 weeks from selling options. Dividing 62, which is equal to my profit, with initial balance of $2,000, which I had in the beginning of February, will be equal to 3% of profit. This is equal to monthly return of 6% or annual return of 72%. 72% of annual return. This is a very high profitability in trading, and such high profitability I was able to earn with implied probability of 90% of success. So I have already 11% of profit. So I would like to take this profit. And to take this profit, I have to go to the expiry date, select the option which I bought, place the price for which I'm ready to sell the option, click sell and create order. Now let's wait until the order will be executed. And the order was executed and I just realized my profit. And if you would like to learn more about the strategy that I use and take a look at my public portfolio, you can watch this video here. See you in the next video. Bye!